Here are 9 reasons for optimism in the markets right now. Reasons to be bullish. And I know what you're thinking, but Lark, isn't the world ending? Isn't the sky falling? Some days it definitely feels like that. But if you look at the bigger picture, there's actually some pretty interesting stuff. So first, let's just get straight into this. First, I want to talk about recession fears. Look, at some point, there is going to be a recession in the United States. There's always recessions, okay? It's part of the economic cycle. Yield curves on inverting. I get that. Maybe it's 6 months. Maybe the yield curve is wrong this time, although it hasn't been wrong since like 1945. But maybe it's wrong this time. So much manipulation with central banks. And look, the economic data just keeps supporting the case for, well, those recession fears are probably too early and too overblown, to be honest. We just had new jobs data come in. Jobs are looking good in the US. Economy is growing. Look at this economic data here. We see that bankruptcies are declining, not increasing. You would expect that in a recessionary environment, things would be spiking like crazy and you'd have all kinds of companies going out of business. No. Now some companies have been struggling. We see in the Q2 earning reports that there has been some pain for companies, not all companies, but some companies. Still, though, it doesn't scream that, hey, a giant recession is just around the corner. Or what about this? This is a very interesting chart. Look at this. This is rail traffic. It's up. It's up, meaning economic activity remains strong. Very interesting, right? I know house prices are down. I know there's been a lot of fear in the markets about different stuff, but look at these numbers. They are very fascinating. The second big reason, rate cuts are coming. Now, when rate cuts happen outside of a recession, they can be bullish catalysts, at least in the short term. Right now, there's basically a 100% chance for a rate cut in September. The only thing the market seems to be divided on is whether it's going to be 25 basis points, 50 basis points, or maybe more, probably not more, but 50 even feels maybe a bit much, but 25, definitely on the cards. 50, the markets are probably quite like that. And the markets might not like not getting 50. So there's that to keep in mind. But rate cuts are coming. Rate cuts are coming. The higher for longer. Look, if Jerome Powell doesn't cut the rates in September, we're probably heading for some bad shit, man. Because it is starting to have a crushing effect on the economy. And if they want to avoid the hard landing and somehow magically pull off a soft landing, which rarely happens from central banks, then they need to cut and start cutting aggressively. And that will spark a bit of liquidity back into the wider business world, because what you're going to see is that now companies can borrow for cheaper, people can buy houses for cheaper, et cetera, et cetera, et cetera. Number 3, the Japanese carry trade unwinding. Now, I know, we all had to become experts this week on our new thing. What the heck is happening in Japan? What's up with the Japanese economy? What's happening with Japanese stock markets? What is this carry trade thing? The carry trade, real quick, in case you don't know. Basically, Japanese yen could be borrowed at basically nothing. And they would borrow that, go and buy US stocks and US bonds, like about buying US bonds, 5%. Basically no risk, unless the US dollar yen ratio changes too quickly, which is what happened when the Bank of Japan said, hey, we're going to raise interest rates. Markets freaked the heck out. Huge unwinding of massive leverage happened basically overnight. That was Friday. By Monday or Tuesday, I think Tuesday, the Bank of Japan came out and said, actually, you know what? We're not going to do the whole interest rate hike thing. We're just going to capitulate on that. It's causing too much craziness in the market. They'll be back. But for now, kind of blown over. Even JP Morgan saying that about 75% of the Japanese carry trade has unwound over the last few days, which is crazy to think about. But that's no longer a problem for us. Just a short storm in the otherwise breezy life of the markets, right? Number four, the Middle East has not blown up again. Oh, it's going to be back. It always comes back, doesn't it, man? There was a situation, Iran was threatening to do all kinds of stuff, and other countries are threatening to do all kinds of stuff. And, it's a very strategic region, as you probably know. But the Persian Gulf, like half the world's oil comes out of that tiny little strait, the Strait of Hormuz right there. That's crazy. If there's a big regional war, what's that do for oil prices? What's that do for inflation? What's that do to the global economy? Yada, yada, yada. Do other major oil producers get drawn in? Do they start bombing oil fields? I mean, my goodness gracious, a lot of implications. But cooler heads have once again prevailed. The Middle East has not blown up. again. Usually they don't want to. I don't think anybody really wants these wars, but then also nobody wants to be pushed around. I don't know. It's some crazy stuff, man. Above my pay grade, let's put it that way. But hey, you know what? It hasn't blown up, so bullish. Number 5, this is finally getting very crypto specific here. ETFs. Bitcoin ETFs have taken over $17 billion. Basically, every single day of Bitcoin ETF buying buys 2 to 3 to 4 times what miners produce on a single given day. That kind of long-term economic impact cannot be discounted. And ETF buyers are proven to be pretty strong-handed. We had this giant Japan carry trade unwind monstrosity happen, and only about $300 million of ETF products were sold. Think about that. In fact, there was a lot of dip buying from some of the ETF products, just we had more outflows on those couple of days. So there wasn't billions of dollars of outflows. So ETF buyers long-term are going to lock up a giant percentage of supply now at the market top, whatever that ends up being, whether that's 100K, 150K, or $215,000. Those are the Fibonacci retracement prediction levels, by the way. Maybe we'll see some huge outflows. You start seeing the price. If you get to see the price at $150,000 for Bitcoin and you see $1 billion plus day outflow from BlackRock, shit's over, man. Get ready, because they know. But until then, bullish catalyst, massive accumulation by Wall Street. Okay. Number 6, another crypto specific event. We just got news that the FTX estate has decided that $12.7 billion is going to be given back to, well, regular people. That's crypto natives getting $12.7 billion stuffed into their pockets. Now, it's not happening tomorrow. It's going to be a few more months. Man, it'd be great if it was like October, wasn't it? That would just line up perfectly with all the other crazy going on. Anyway, that's a very important crypto specific event that can really pump the markets up. That's a lot of money, man. That's a lot of money, and that's coming in the not so distant future. Unless we have World War III or some kind of ultimate economic Armageddon between now and then, that's going to have an impact. Number 7, the pi cycle chart indicator. Now, this has previously marked basically perfectly, or within a couple of days, the top for Bitcoin. We're not even close yet. Now, if we start running really hard, that could come sooner than people expect. Or maybe all kinds of economic chaos happens. We get a good run. We get a first top. Pi cycle doesn't top. We get some kind of recession, mid-cycle chaos, and then we finally top out in late 2025 with $215,000 Bitcoin and a pi cycle top indicator flashing. Still, though, it's noteworthy that it's not even anywhere close to topping currently. Number 8, the global liquidity index is on the rise. Now, how long that rises for, how long before it turns over, is anybody's guess. Okay, it could last months or much longer, but it is on the rise. And when global liquidity rises, the prices of risk assets like Bitcoin, like Ethereum, like your dog coins, they go up too. M2 money supply going up. So that's the amount of available money in the system that's going up. It's going up in the United States. It's going up in China. Huge amounts of money coming, right? Plus, you have this crazy story that the U.S. Treasury is going to start buying billions of dollars per week of Treasury bonds. So that is a massive, massive amount of money. I mean, think about that. They're going to do $50 billion in the month of August, September, and October. So not per month, but like 10 billion in August, 30 billion in September, and another 10 billion in October. Huge amounts of money printing before the U.S. elections. Is that a coincidence? Probably not. Which brings me to point number 9, the U.S. elections. They are going to do what they can to prevent a collapse because the incumbent, which is Kamala Harris at this point, even though she's the vice president, but still the incumbent, if there is some kind of economic Armageddon happening, a new Great Depression is formed up between now and the election. No way, man. You're not getting reelected in that situation. There will be a protest vote just because you let the economy collapse like that. So the party in power will do what it takes to win. Stuff like having the Treasury buy $50 billion of bonds, right? Stuff like this. The collapse can come later once they're back in power. That's fine. Also, as a crypto-specific thing, if Trump gets elected, then he is the much more pro-crypto candidate by comparison to Kamala Harris, who hasn't really done any positive things or even said very much positive about the cryptocurrency industry, except kind of wanting to reset relations. But what's that mean? Who even knows? Trump has really been trying to walk the walk here, getting a vice president who literally owns Bitcoin. These are all positive steps, making big statements, most of which probably won't come true, but still crypto's big campaign issue. So that matters too. So I know there's a lot of crazy going on out there in the world, guys. I know. But there's also a lot of reasons to be optimistic about what could come in the markets. How long does it all last? When's it top? Well, that's for another video. But here are some reasons why things might not be as bad as they always appear. Thanks for watching.